how should you have played this? How could you have made money on this? And how can you make money on the Fed in the future? Hey, it's Alan from OptionGenius, and in today's video, I wanted to talk about the Fed and how to make money from the Fed. How do we as passive traders make money when the Fed is going to make an announcement? So a little bit of history, a little bit of background. I don't know when you're watching this, but today, while I'm recording this, is May the 4th, 2022. And today we just had a Fed announcement. Fed just came out, made an announcement. They raised rates. They raised rates last month. They raised them again. And I want to talk to you about how the market's performing and how we could have made money off of it. So now you got to understand, in the last several years, markets have been doing great. Fed was not important, right? Fed had their meetings. They did their announcements. They raised rates, they lowered rates, whatever. They lowered. Mostly they were just lowering rates. They didn't raise that much over the last, say, 10 years. But the Fed wasn't really important. We wouldn't even notice as traders. Whoa, there was a Fed meeting today. Oh, okay, what happened? Oh, yeah, because nothing in the market happened. Nothing changed. Market wasn't paying attention to what the Fed was doing. So we as traders didn't have to pay that much attention. That changed in 2022 when the Fed said, hey, we are going to raise rates and we're going to do it aggressively. Bruh. That changed the whole ballgame. Everything is different now. 2022 marks the time when the stock market returns back to normal. This is going to be a normal stock market year, a normal trading year where we go up and down and up and down. It's not just straight up anymore because rates are zero or very, very low, or they keep going low. Okay. So in the past, since the last meeting when they raised rates a quarter point, the Fed has been talking. Powell, the chairman, has been talking. The other governors have been going out and been talking. They put out articles. They put out interviews. They've gone in speeches. And they said, hey, we're going to raise rates 50 points in this next meeting, which was today. Right? We're going to raise 50 points. And they actually said it. And they've been telegraphing everything that they're going to do up till now. And up till now, I think the Fed is doing a great job.
That's awesome.
We do have inflation. I get that, but those were things that were not in their control, right? They cannot control the COVID thing. They cannot control the not having enough cars on the road. They cannot control the supply chain and the lack of truckers in California to unload all the ships, and they can't control that. So obviously, yes, there's going to be some kind of inflation. Some prices are going to go up, and then they'll even out and maybe they'll come down or whatever, but they figure out, hey, we need to raise rates. Cool. Awesome. Got it. So they're raising rates. It couldn't be zero forever, right? So now they're raising rates. They told everybody, hey, we're going to go up 50 cents, 50 basis points. So 0.5%. We're going to go up, and eventually we want to get to 2.5. And so today they made an announcement. Fed said, hey, we're raising 50 cents. Then Powell came out. He answered some questions. And he said that. He was like, yeah, hey, inflation is there, but it might be peaking, it might be stopping, or it might not. We're going to raise 50 points this meeting, and we're going to raise 50 points next meeting, and then we're going to try to get to that 2.5 point range. And we'll see how it goes, because more than a month out, more than 60 days out, we really can't predict what's going to happen. So we have to go, month by month and see what happens. So that makes total sense, right? Sounds like a smart answer. Right? He's telling you what they did and why, and he's telling you what they're going to do next. But later on, after that, he's not saying anything. He's like, oh, we'll have to check. We'll have to see. So kind of leaving the market on edge a little bit, but still, what's going to happen. You know what he's going to do, and you know what the target is. So he's telegraphing. He's basically giving you the roadmap and saying, here, this is what we're going to do. There should not be any surprises. Right? So you think, okay, he already told us what he's going to do, and then he did what he's going to do. Whoa, what a concept, right? Somebody actually lives up to his word. He did what he's going to do. And so the stock market should not have really done anything. It should not have been a non-event because everybody knew it was already baked into the price. But what happened to the stock market today? Well, it's up over 120 points, the S&P 500, and it's almost 3%. Almost 3%. It's about to close right now in a couple of minutes. 3% on a day when you already knew what was going to happen because he'd already told you.
Yes!
Now, if you don't believe him, and a lot of Wall Street obviously didn't believe him, maybe they were expecting something else. Maybe they heard something that he mentioned, there's no way to tell. And so for the people who are trying to predict and play today's announcement, they got hammered. Because nobody expected a 3% move. Not the options change, not the experts on Wall Street. Nobody expected a 3% move, but somehow we ended up 3% today. So how should you have played this? How could you have made money on this? And how can you make money on the Fed in the future? It's very simple. You make money on the Fed by not losing money on the Fed. What do I mean by that? I mean, don't play the Fed. If the Fed's going to make an announcement, you don't want to be trading at that time. Basically, you treat it like earnings. Now, if you've been following me for any period of time, if you're selling options and doing passive trading, we don't trade earnings, right? Because you never know what's going to happen in earnings. It's uncertain. It's high volatility. Don't know what's going to happen. And so you can get blasted in either direction. Same thing with the Fed. This is now in stocks. The Fed is the most important thing to keep your eye on. To listen to pay attention. They are the most important thing. If you're even trading any stocks, the Fed is more important than how much money that stock is making, that company is making, how the chart looks on that stock. The Fed is more important than basically everything. You don't fight the Fed, right? That's the saying. It's been around for a long time since they made the Fed, and there's a reason. You don't fight the Fed. Now, again, like I said, the secret to making money off the Fed is not to lose money when the Fed making an announcement. Now, this is going to go contrary to all the other option gurus out there that are telling you, hey, you need to be selling options when volatility is high. Volatility was high right before the Fed announcement because it's uncertain, right? So they would have told you, oh man, go sell a calendar, go sell a strangle, straddle, do something, sell options when premium is high, when volatility is high, sell it. And then what happened? They probably got their butts handed to them. Today. 3% move. Nobody saw that. You can look at the implied moves and all that. It was not there. So it just goes to show you that if you're going to play the long game like me, right? I want to be doing this for the next 30 years, 40 years, 50 years. I don't know how long I'm going to live. I want to keep doing it. I don't want to get blown up. I don't want to get my butt handed to me for a stupid reason. And a stupid reason would be to go into a very high risk situation and put a trade on, just to make a little bit extra premium. So I would not trade today. I would not have traded yesterday, the day before. I would wait till the Fed hoopla is over, right? Market's up almost 3% today. 2.99 is where it's closing. 2.99%. Wait a day or two. Let the smoke clear. Let the market tell you what it's going to do next. Then you place your trade. Yes, volatility will be down then, and you'll make less money for selling an option, but it'll be safer. And in the long run, that makes more sense. Because option traders, I have so many people I've talked to, they do good because, it's easy to sell low delta options. Oh yeah, probability's on my side. Yeah, great. Do that. Then they crash because they blow up, because they make stupid moves like this, because they're told to do stupid things. So yeah, this is controversial in the markets, and the other gurus don't really like that I'm saying this, because they blow up and then they go away and then a new guru takes their place. I've been around here for like 14 years telling you what to do, teaching people what to do. So yeah, I'm still here. Maybe I'm doing something right. So if you want to make money on the Fed, don't try it. It's not worth it. It's not worth the stress. It's not worth the high blood pressure. It's not worth the extra drinking all that extra yucky Pepto-Bismol. You don't want it. You don't want the heartburn. You don't want the stress. You don't want the high blood pressure. Put the odds in your favor. One of the ways you do that, there are many different ways to do it, not just one way. It's not just probably the profit. Put the odds in your favor. One of the ways is by staying out of very risky situations, like a Fed announcement day. So don't be putting on trades, trying to game it. If you're going to put on a trade, wait till after and then play it that way. All right? Hopefully this episode will actually help you and save you from some heartburn. All right. May the odds be in your favor. Take care.